Hello traders, Gary Wagner here. It is approximately 11:46 in Honolulu, 4:46 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the second day of December 2022, and this is the daily report for gold and silver, our weekend review. And what a stellar performance we saw in both gold and silver, with gold gaining about 3.2% on the week and silver gaining in excess of 8.5% this week. Today, though, gold did sell off fractionally. Currently, we have the most active February contract down $3.30 at $1,811.90 after testing and challenging the lows, taking gold futures to $1,791.80 before recovering. Silver had a dynamic move to the upside, a continuation of this solid trend, because the jobs report had the opposite effect on gold than it did on silver, because a strong economy is solidly a bullish undertone for silver, whereas that could put slight or fractional pressure on gold. Silver basis, the most active March contract, is currently fixed at $23.35 after factoring a solid gain today of 51.5 cents or 2.25%. That all occurring with some dollar weakness. That provided mild tailwinds. The dollar continues to track lower, losing 0.23% today, with the dollar index currently fixed at 104.45. What an interesting and pivotal week for gold as well as silver, with a strong recovery from the intraday low that occurred last Wednesday when forces took gold pricing down to $1,719 on an intraday basis. Monday is this red candle here. So we started on a sour note, taking gold to approximately $1,740. That was followed by a slight recovery. A little less than half of the decline we saw on Monday was gotten back on Tuesday. We had this small gap on Wednesday, and remember, Wednesday is the day that Chairman Powell spoke in Washington, D.C. So what you're seeing with this small-bodied red candle, and especially the open to close, which is red, is a reflection of trading in New York, which closed before we saw a reaction to Powell's speech. That propelled gold from approximately $1,765 up to this week's high, just shy of $1,820. This was Thursday's candle. Today, the jobs report came out, and because it came in above expectations, the expectations were looking for an additional 200,000 jobs to be added last month in November, and it came in at a robust 266,000. If you want to say robust, I've just put a chart up that looks at the jobs report over the last year to 2 years, and what you can easily derive from this is the fact that today's jobs report shows the smallest number of new jobs added since December 2020. Traders, we have absolutely seen a disconnect between gold prices and silver prices, with silver absolutely outperforming gold, and the major rally which we saw begin on November 3rd in gold, began much earlier in silver. We're marking the beginning of this rally occurring about mid-October when gold hit these lows at 1,800. We're also looking at a fact that we have seen a major pivot in both gold and silver in terms of market sentiment from extremely bearish to bullish. And in lieu of that, we have just reversed our Elliott wave count from a bear count to a bull count. In a bull count, the impulse waves, which are waves 1, 3, and 5, move to the upside because the primary trend is higher, where the corrective waves become 2 and 4. But before we look at our current Elliott wave count as well as projection, I want to take a look at the moving averages. We have 3 moving averages up on the screen. In blue, we have the 100, Green is the 50, and the 200-day, of course, is the longest moving average, and that is currently at the highest value. When you have the 200-day at the highest value, followed by the 100-day and then the 50-day, that is in full bearish alignment. However, you can see that around November the 14th, we had the 50-day cross above the 100-day, which means if silver prices continue to rise, eventually the 50-day will be on top, followed by the 100, and the lowest value of these three moving averages would be the 200-day. Which brings me to my silver forecast for the end of the year, Q1 and possibly Q2 of 2023. I am assuming that in terms of our Elliott wave count, we have seen wave 1. That took silver pricing up to $21.28. We then had a correction down to $18, and from there, we moved into our longest wave, which will be our impulse wave number 3. I believe that that could terminate at approximately $24.25. Then next year, once we see the conclusion of this third wave, we would get a correction. The correction would have to occur above the top of wave 1, 21.28. I'm looking at about $22 for the correction. And then I believe our final fifth wave could take silver as high as $27 per ounce by the middle of 2023. In terms of our current forecast for gold, we have been talking about it all week, but in essence, we talked about the pivot. We definitely had an Elliott wave bear count in which the primary waves, the impulse waves, follow the trend which is lower. Our counter waves or corrective waves go higher, and I believe that that concluded on November the 3rd when we hit this last bottom at 1621. We then began a bull count. I'm looking at our wave 1 being the first leg of this rally from 1621 to 1791. Our corrective wave 2 took us back down to 1719, which brings us to our current wave, which I believe is an impulse, the longest impulse wave, wave 3. In terms of levels of support, I currently peg that at 1790 to 1802, and that is based upon this top here. At the low end, the high end is based upon the 200-day moving average at 1802.40. In terms of resistance, I believe we have our first level of minor resistance at about 1825. That is based upon this top here. And if we compress the chart, you can see that the top end of resistance is based upon this top here that occurred in June of this year. Which brings me to my interim forecast for gold. In other words, where I believe wave 3 could conclude. As I said, we're looking at this as our wave 1, our wave 2. We are now in a wave 3. By definition, the third wave cannot be the smallest of any of the impulse waves, 1, 3, and 5. If we have our benchmark wave, which is wave 1, the minimum we could see wave 3 go to is about $1,890 to a high of about $1,900 is what I am looking at. That would take us to a wave 4 and then concluding at a wave 5, which is the forecast that I've presented to our subscribers of 2023. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.